Now, David Jones' profits, well, talk about rubbery. They've slumped nearly $500 million for the 2019 financial year. The retailer blamed costly impairments and write-downs behind the loss in earnings. Terry McCrann, when we heard that they were shutting at least their menswear store in the Burke Street Mall earlier last month, I guess there were telltale signs that they were in strife.
Well, they obviously, you know, the whole retail environment is sluggish, as we've been discussing, and particularly department store retailers. Running those full-service department stores across, a whole chain of stores, there's clearly not the demand out there to sustain it, irrespective of what's happening in the economy. Those are the structural changes, the online growth and the differentiation that you now get much more into specialty retailing. But all that said, clearly when this David Jones was taken over by Woolworths, and that's the South African Woolworths, nothing to do with the Aussie Woolies. Yeah. They paid too much. They bought at precisely the wrong time when department store retailers were essentially hitting the wall. And they've had to face that reality that they paid too much. They've written the money off. And I have to say, I'm not entirely unhappy with that. If people are if we're going to sell assets in Australia at too high a price, better to sell them to foreigners than to sell them to locals.
Let them catch the baby. But Terry, are we officially in a retail recession, do you think?
Well, I think that it's more fundamental. The structural changes that have taken place in retailing across the board with the growth of the online world in particular, and the fact that Amazon has now arrived in Australia, those are the things that are driving this. Myer have been through this as well, and they've sort of stabilised. I think ultimately you've just got to cut the floor space. And I've argued for some time that the real solution to this situation is for DJs and Myers to get together and close half their stores. That's a sort of a brutal reality, but I think that's the reality that they have to face.
Well, that was my question to Andrew. Andrew, will we see Myer put in a bid for DJs any time in the near future?
It's hard to say. I'm certainly sympathetic to the idea that Terry's just been saying, that there are a lot of headwinds for retail in general at the moment, but there seem to be particular headwinds for department stores, so that might well make a lot of sense. To go back to a point that you were raising before, actually, in relation to tax cuts, though, I think there is the broader issue here with retail, that part of the trouble is for the last few decades, we've been having a situation where households have been being encouraged to run up more and more and more debt. So aggregate household debt compared to household disposable income has gone from 40 or 50% back in the mid-1980s up to almost 200% now. So one of the difficulties is that helps with retail over a long period because everybody's getting their own income, but they're also borrowing a bit more to spend. The trouble is we may now be in a situation for the next few decades where actually we need to start paying down some of that debt. And so I think there are just going to be general headwinds to retail, and that may make it particularly difficult for David.
Someone's got to pay off the debt at some stage.